Hello, everybody. Jason DeBono with New View Trust Company. Just going to share some commentary on what's going on in the self-directed IRA world and really in the investment world as a whole. We've been getting quite a few questions on where we go from here and what's the end look like and what's the future hold. And I guess I'll start by saying we don't have crystal balls. If we did, we probably would be too scared to look into them and see what the future holds. But we can learn a little bit each day as we get more information on things we can do to protect our investments and things we can do to make sure we're making the best investment choices going forward. So I'll start with really a word that seems to come and go in popularity, and that's diversity. Diversity was a word that historically always meant you buy lots of different investment classes, and if things go bad, you're protected. I think the problem most people have learned with diversity, number one, is all boats rise in a rising tide and all boats sink in a sinking tide. And I think if you've been fully exposed to the stock market, you've felt that. There's been some certainly volatility in the last couple of weeks and month, without a doubt. I think just looking at it the last couple of days, it's been up and down and up and down, almost equal parts. And so it's hard to understand as an investor how to navigate that. The other thing that I think is a challenge is understanding what the news actually means. I recall the first day of unemployment surging to record highs. There was something like 6 million people, that were joined the unemployment numbers, and the market went up. And so it kind of seems counterintuitive. If unemployment is going through the roof, that would be a sign that we have some issues from an economic standpoint. Yet the markets continue to rise. So I think what we're seeing right now is we're seeing a lot of people view the stock market as being cheap, and we're seeing a lot of people trying to pull some excess cash and invest into the various opportunities they think are presented. And certainly, if you believe that's an opportunity, then I would encourage you to go take advantage of that. The part that I would caution you on is if you believe that you're smart enough to know when to buy, make sure that you believe you're smart enough to know when to sell. Because watching something go up and go down and go up and go down, if you're timing it on the downside, you got to be equally as able to time it on the upside. So, if you're looking for a long-term disciplined approach and you're going to hold it, that may provide you some value. But we believe at New View that diversity is much bigger than stocks, bonds, and mutual funds. Diversity is investing into a myriad of asset classes and all asset classes that have a different level of risk. And so I'll start with real estate. What real estate provides from a level of diversification is certainly it eliminates daily volatility, and just sheer peace of mind, provides you a lot of value with that. But what it also does is it provides you income streams. And while there's stocks that do have dividends, and certainly those dividend stocks can be more attractive, the drawback in a shrinking economy is dividends tend to get pulled. And so what you're left with is an asset that you only can get paid on or only can make money on the buy-sell side. And again, going back to timing, you've got to be really good at buying and really good at selling, and that can be a little bit of a challenge for the average investor. What real estate can provide you is the ability to own an asset. It can store value for you, but it can also provide you income. It also provides you the ability to use leverage, even in an IRA via non-recourse loan, so that you can buy more real estate than maybe your liquid cash provides you the ability. But even in a down market, rent tends to remain flat in a lot of cases, even going back to 2008, 9 and beyond. While there was some short-term disruption in the rental market, rental proceeds actually increased significantly through that time. And so what you had is assets that had lost value, but the rental proceeds were actually making our clients more money, even as the economy was going down. And so as those prices recover over a long period of time, which investing should have a long-term approach, you've been able to protect the upside of your overall asset from a long-term approach, but you've also been able to generate a return on a monthly basis. And a stock going up can't go back 2, 3, 4 years prior and provide you any value. So you're living and dying a little bit on that appreciation. Things like promissory notes, private lending can be great sources of diversity. Not all loans are real estate based, so there can be loans that can be tied to a myriad of assets. And as we see in markets that are going down or potentially going down, or economies that are potentially entering a period of recession, we start to see loans become asset classes that become increasing in popularity and can provide a level of both income in terms of note payments, but can also provide protection in terms of collateralizing those based on market conditions and the asset classes that continue to hold value or maybe even increase in value. And so many businesses and many homeowners and other individuals may turn to private loans as a means, and so there's some opportunity there. Tax liens, tax certificates become opportunistic because you now have potentially less people paying their taxes on an annual basis, and so municipalities are selling those as a buyer. You can generate a nice return on tax liens and have that underlying comfort knowing that when that property is eventually sold, if it's the right type of property, that lien will be satisfied and any earnings will be accumulated. Precious metals, gold, silver, platinum, palladium, if you're looking for hedges against potential cycles in an economy, precious metals can provide that to you, and those can all be done in a self-directed IRA. And so when we talk about investing and we talk about diversity, don't be misled by the idea that diversity is just simply buying different stocks. Make sure that you're looking at all different asset classes. I would continue to encourage everybody to stay vigilant in these times. Be sure that you're preparing for what investment opportunities lie ahead. And most importantly, educate yourself on what those investments look like. And I would encourage you lastly to really look at some of the Main Street opportunities versus just the Wall Street opportunities. So we wish you all the best of luck, and we'll continue to be providing commentary through this process. Thanks everybody, and stay safe.